The main difference is about control and centralization. So traditional money is controlled and centralized by bank and government. It's issued and regulated by governments and bank. While cryptocurrencies, on the other hand, are what we call decentralized. It means that no single entity controls them. They are issued over the blockchain technology, which works in parallel of internet. But one real trend that we are seeing now, it's many governments, including in the UK, other African government, Latin America, are exploring what we call central bank digital currency. We say CBDCs, which stands for central bank digital currencies. They are digital version of national currencies. So, for example, in the UK, we will have a digital pound note, but instead of being the traditional one that your bank sends you, it will be one built on the blockchain.
Welcome to Vibrant Publishers podcast. Our guest for today is Melissa, who is a consultant and researcher specializing in the realm of emerging technologies like blockchain, cryptocurrencies, fintech, financial inclusion, decentralized finance, and Web3. She's the founder of Maloya 5D Lab that provides strategic consulting services and research on blockchain and other emerging technologies. Welcome to the podcast, Melissa.
Hi, Nakul. Thank you so much for having me today.
So let's begin with a bit about your journey in this field, in the field of cryptocurrency.
Yeah, so just like you said, my background is in fintech. Fintech stands for financial technology and how we can improve a banking and financial system with innovative technology. And over time, I became interested in blockchain technology, and I quickly realized it was a game changer. So
Hmm.
back in 2018, I decided to deep dive into crypto, learning everything I could from scratch. And this hands on approach allowed me to develop a real expertise in the field. And today, I also hold a diploma in DeFi, which stands for decentralized finance. And it's a field that focuses on using crypto technology to build a new financial system.
Got it. Thank you for sharing that. Now, for the beginner listening to this podcast, someone who is interested in getting into cryptocurrency or just wanting to know about it, how would you explain it to someone who has no prior knowledge of finance or technology?
Okay, so cryptocurrency is simply digital money. And unlike traditional money, it is uncontrolled or issued by banks or government. Instead, it runs on a technology called blockchain,
Okay.
which acts as a public ledger. So, blockchain will record every transaction in a secure and transparent way. This allows people to send and receive what we call cryptocurrencies, which essentially is digital money or digital coins, which hold value directly over the internet. And all that without needing a bank or an intermediary. So, cryptocurrency, for example, are widely used in countries with unstable economies. For example, we can think about Latin America. Many people will rely on crypto to store, hold, or exchange their salaries to something more stable like cryptocurrencies because it's not controlled by any government, essentially.
Okay. And if you could go through the differences between crypto and traditional money?
Yes. So, just like I've said, the main difference is about control and centralization. So traditional money is controlled and centralized by bank and government. It's issued and regulated by governments and bank. While cryptocurrencies, on the other hand, are what we call decentralized. It means that no single entity controls them. They are issued over the blockchain technology, which works in parallel of internet. Another key difference is transparency. Crypto transactions are recorded on blockchain, making them traceable by anyone. And finally, I would say that it's way cheaper to send cryptocurrencies from one account to another than traditional banking system.
Okay, got it. Now let's get into the tech behind this. So the cryptocurrency runs on blockchain technology, and so why? What is, first of all, what is blockchain technology? If you could explain that, and why is it important for cryptocurrencies?
Yes. So blockchain is a digital ledger that records every transaction in a way that is secure and unchangeable. So digital ledger, imagine a book where each page is a block of transaction. We write everything on a page. And once the page is full, it is permanently linked to a previous page. So it forms a chain, and that's why it's called blockchain. It's simply a ledger, so it's very simple to understand. And blockchain is really essential for cryptocurrencies because it ensures trust without needing a central authority, because everything is going to be recorded on the chain of blocks, essentially. What makes blockchain really special is that no one can go back and change the notes on the pages. No one can go back and change the blocks. It is transparent, secure, and verified by a network of computers all around the world, which this is why we call it decentralized, because it's verified by a network of computers everywhere in the world, not by a central authority like a bank. And one really, really important feature about blockchain is that it prevents double spending. Double spending means that the same digital currency cannot be used twice. Think about, for example, an image on the internet. If you download a picture, you can copy paste it as many times as you want and send it, many, many times. But now imagine if digital money on the blockchain would be the same. It means we could spend the same $100 of cryptocurrency multiple times, and there would be a big problem. But no, thanks to blockchain, it's impossible to spend the same coin or money or value twice, because it's unchangeable. Like on the record, once this is spent and sent, we cannot change it. We cannot do it another time. It's unchangeable, and so we cannot just use the same coin twice. So this means that digital money on the blockchain or digital value works just like digital cash. You can exchange it with between people without a risk of double spending it.
Got it. Now I'd like to discuss about what some of the common myths or misconceptions are about cryptocurrency, because since this is an emerging technology, there's a lot of doubt whether if crypto is safe, if it's reliable. So there must be a lot of myths and misconceptions. So if you could clear that out.
Yes. So I would say one big myth is that crypto is used only for illegal activities. But I would say just like fiat currencies, fiat currencies can be used for illegal activities as well. So it's not just crypto.
Right.
In reality, most crypto transactions are legal, transparent, and we are seeing many governments now and businesses adopting blockchain technology and crypto. So it's not just for illegal things. Um, Another thing is that people think crypto has no real value. It's just something on the internet that that doesn't really have value. But like any currency comes from trust and demand, right? Demand. So a key point to remember is money has always been about trust. So if we accept digital payment from banks, so why virtual currencies should be less real? I feel it's all about trust and what you believe has value. It all comes down to trusting the system. So if more people trust it, then it will have the same value as fiat currencies. And finally, I would say a blockchain is not just about crypto. Crypto is one application, but blockchain technology in general, so the technology behind crypto, can also be used for supply chain tracking, digital identity, land registry. So, we shouldn't get confused between blockchain, crypto, and the fact that blockchain has many other applications beyond crypto.
Okay, correct. You were mentioning that a lot of governments are also implementing cryptocurrencies. Uh, are there any examples, and what is it exactly used for? If you could give some real world examples.
Yes, absolutely. So more companies, governments, financial institutions are integrating crypto into everyday use. So earlier I was giving the example of people with unstable economies using crypto to hold and store value. But in the case of but actually let's carry on with this example. One key driver for this is stable coins. So stable coins is a type of cryptocurrencies which is pegged to traditional currencies like US dollars. So if the US dollar, goes up, the stable coin will go up in the same manner and down, etc. So it's really good because it allows, to store money on blockchain without the well-known volatility of cryptocurrencies. So stable coins can be used by the people, but it can also be used actually by companies, government, or why not financial institution. But one real trend that we are seeing now, it's a lot, many government, including in the UK, other African government, Latin America, are exploring what we call central bank digital currency. It stands, is we say CBDCs, which stands for central bank digital currencies. They are digital version of national currencies. So, for example, in the UK, we will have a digital pound note, but instead of being the traditional one that your bank sends you, it will be one built on the blockchain. So we really are seeing some real world application of blockchain and crypto.
Correct. So do you think at one point traditional money might get replaced by cryptocurrency?
I would say not completely. Traditional banks and money will likely integrate blockchain technology, just like we explained now. But I feel decentralized finance, which is using crypto money to build a financial system, will be offering alternative to people. So I would say there will be traditional money with banks, which will also have included integrated blockchain, but we will also see online platforms offering decentralized finance services, which is already the case right now. We have some platform, like one platform called AVE, AAVE, which is a DeFi platform. And if you go to this platform, you can lend, borrow, and earn interest all with crypto essentially. So I feel while banks we still exist, we will see crypto and DeFi providing more option for people, more financial freedoms, opportunities, and more financial inclusion as well. Because crypto is about including people, while traditional banking there's a lot of restriction about who can participate in it.
Right. Now, what if someone wants to invest in cryptocurrencies? Can you tell them how can they get started with this?
Sure. So I would say learn the basics, start with Bitcoin, Ethereum, understand key concepts like blockchain, what is a wallet, learn about market volatility. And the good thing is now there are so many online resources for free, even like free classes, free videos, articles. So it's really, really easy to learn the basics for free. Then, of course, you're gonna have your initial money, and you will want to go to what we call an exchange to buy your cryptocurrency, the one you picked. So go to a well-known exchange such as Binance, Coinbase, or Kraken. Check, what works best for you, and you will have to go through a lot of KYC, meaning you will have to show your identity and this type of thing, which makes investing in crypto also legit. And then I would say start small. Don't do anything crazy because there are a lot of volatility in the crypto market. So don't invest more than what you can actually lose. And an important thing as well is once you've bought your crypto on the exchange, such as Binance, don't leave your money on this exchange. Actually, withdraw it to a wallet. So just like you would put your notes, your bank's notes in your pocket in your wallet, there are wallets for crypto. Different types of wallets. There are hot wallets, which are online wallets that you can have on your desktop or on your phone, like an app. For example, one I like very much is called MetaMask. It's very easy to use, very convenient, and it's great because since it's online, you can trade easily, you can move your cryptocurrencies easily. But the most secured wallet are called cold wallets, which are physical devices. For example, one is Ledger. It's a physical device, so the thing is you will need to buy it. So there is an upfront cost of buying it, but it's really secure. It's something like an USB key in a way where you will put on your laptop and it will allow you to store your cryptocurrencies offline of the internet. So you need to think about how you're going to store your crypto once you've bought them. And then, avoid scams, all these WhatsApp groups or Telegram group or, all these things or TikTok ads or whatever. Just try to stay away from all this excitement because usually it can lead to scams. So just, stay into the mainstream stuff. So, you have less risk of being scammed. And also think long term because just like any trading or stocks or investments, sometimes the prices rise, sometimes it falls down. It's all about cycles. So if the price drops, don't panic and sell everything. Maybe tomorrow it will go up again. And one thing I want to say, I feel it's really important to mention is we are seeing a rise of crypto gambling addiction. So be very careful, never spend more than what you can lose, never borrow money to invest into crypto, and be mindful of the addictive feature of it.
Right. Those are some nice points to be aware of. Uh, what if one loses access to their cold wallet? Suppose they misplace it, or they maybe they lose it. Is there any way to retrieve your crypto?
Okay, so the thing with crypto is it's us entering an era of responsibilities. We have to be responsible for ourselves. And with crypto, no, there's actually no way of retrieving your money. So the way a wallet works is you will have what's called a public key and a private key, and you will have to store like these things. Maybe you write them down and keep it in your safe at home or somewhere safe. So if you have a problem, you can retrieve your money. But if you lost all these things completely, you will not be able to retrieve your money. And that's what also scares many people, because let's say if you have a problem with your bank or your card, you will be able to go to the bank and say, look, my card is blocked, I can't withdraw my money. Well, with blockchain, it's not the case. With blockchain, you have to be very responsible for holding, storing your money, I mean, your cryptocurrencies. So you have to be very careful indeed.
Correct. Correct. Now, let's talk about some emerging trends in the realm of cryptocurrency, and what future trends do you think are coming in this field?
Yes. So the first one I would say is just what we spoke earlier about real world adoption. More companies, governments, financial institutions adopting CBDCs, central bank digital currencies, or the use of stable coins, which is a cryptocurrency pegged to a traditional currency. So this is going fast, and that's happening. And then I would say the rise of DeFi, decentralized finance. Just like I've said earlier, we see many platforms now where you have kind of banking system, decentralized banking system, where you can lend, borrow money, trade, earn interest, and all this online. And so one might wonder, um, if there's no central authority, how does this work? And the cool thing about blockchain and crypto and how decentralized finance work is with the use of smart contracts. Smart contracts are actually line of code, because blockchain is code. So line of codes in the blockchain that will execute themselves once a condition is filled. So if this happened, then this happens. And essentially it's all automated, and that's why it's really beautiful, and that's why it's possible for it to be decentralized, because it works based on code. So I would say DeFi is really reshaping finance as we know it. So it's still early stage, but I would say in the future, especially in places in the world where people don't have access to mainstream financial services, DeFi products will, know some good success, I'm pretty sure. And another thing we didn't speak about is the tokenization of real world assets. Tokenization simply means taking an asset like real estate or art, something in the real world, like a house. And blockchain allows those physical assets to be tokenized, meaning they can be split into like digital shares and be traded easily on online marketplaces. For example, in the US, there is this platform called Realty, and it enables investors to buy fractional ownership of real estate. So let's say you want to invest in a property, not to live in it, but to invest. But you don't have all the liquidity to buy this property, you don't have enough money, but you still want to be investing into something. Then we can use this tokenized asset to buy a portion of the real estate. And so that's actually something knowing some good success right now. It allows people to invest in real world assets without, having a huge amount of money being invested in, or also, having no liquidity, because maybe if you invest into something, you lose liquidity. while with tokens, digital tokens, tokenized tokens, tokenized assets, you can easily sell these tokens and get your liquidity back. So that's something. I mean, many companies now are specialized into tokenizing the world, essentially, taking every asset in the world and making them on the blockchain and being able to trade all of them on the blockchain.
Understood. Now, my last question to you is what if someone wants to create a career in cryptocurrency? So, what skill and knowledge does one require? And what would be the first steps for that?
Well, start by understanding the basics, just like we said earlier, Bitcoin, Ethereum, blockchain, and I would say especially the whole philosophy behind it. The key concept of decentralization. Why is it meaningful and really beautiful in a way? Why blockchain is a game changer? Why is this revolutionary? There's actually a whole philosophy behind it. That can go really deep, and that brings even like a kind of revolutionary type of mindset. I would say that's really important if you want to work in the field of crypto or blockchain, to understand this. And then specialize, because blockchain or crypto is just like big words. So specialize if you like coding, then learn Solidity or Rust to develop smart contracts on the blockchain. If you prefer finance, go into DeFi. But there are also other valuable skills, cybersecurity, data analysis. I see many jobs posted now about forensics on the blockchain, meaning retrieving all the blockchain transaction, reading the blockchains to understand, to have investigation, or other things that are valuable. But also marketing. Marketing is still very useful in this field. So the industry is very young, and I feel there are many opportunities for everyone to learn and grow. So just if you want to start to build a career in crypto or blockchain, just see what you really like and what's your field.
Correct. Well, Melissa, thank you so much for sharing your knowledge on the world of cryptocurrency and breaking it down into easy to understand concepts for the audience. So, thank you so much for joining us on the podcast.
Thank you so much for having me. Have a great day.